Yeah, hello everyone. This is Manish Shivasto, co-founder and director, Alpha Value Consulting. So today we'll be discussing and deliberating on a very important concept and topic of valuation that is called relative valuation. When we say relative valuation, we are valuing the company based on the listed peer companies of the similar segment that we are into. There are certain caution points that need to be undertaken while valuing your company with the on the basis of the relative valuation. You find the company which are into the similar segment or the domain, but they may be that but the chances of the situation may be that those company may not be producing or providing the service only in that segment. Okay, so there may be companies which are doing X, Y, and Z thing, and your company is only doing X thing. So those are not comparable. So we need to eliminate those. So we need to find, first of all, what are the activities that the similar companies are doing. If the activities remains the same, then we can factor in that these are the comparable companies. Again, we need to look into like what is the size of the comparable company is, in which market those comparable companies are, what is the profit margin those comparable companies are drawing. So these are, so there are certain sort of like, first of all, the selection round, that is very important, and then there is an elimination round, that we should eliminate those companies which does not matches to my company, right? So suppose we able to find like 30 companies in the listed category which are comparable to my company. Out of those 30 companies, on the basis of the size, on the basis of the geography, on the basis of the profit margin, on the basis of the cash flow creation ability, we able to restrict it to 8 or 9 companies. Okay, now what to do or how to go about it. The situation is, the complexity has just started. We think that finding the comparable company, it's like we find the solution to the problem of valuing my company, but the situation complexity have just started. So we need to first of all see like what sort of multiple we need to apply. There are a number of multiples. It may be the EBITDA multiple, it may be the sales multiple, it may be the P multiple, or it may be the PEG ratio, or it may be the multiple with regard to, you can say, price to book value multiple. So these are the n number of multiples, and we need to find which multiple matches to my value proposition, in the sense like suppose if I've been valuing a company which is into the artificial intelligence. Okay, and so this is something that being the new trend company, technology based company, and I can't go and look into the price to book value multiple. Okay, so we can majorly look into like what is going to be the EBITDA multiple, or what may be going to be the sales multiple. That may be the scenario, right? But the question is like very difficult to find the companies which are comparable companies in the artificial intelligence domain, maybe in your geography. So then we need to look into the companies which may be in a different geography. Okay, and then we need to adjust the certain amount of premiums and certain amount of discounts we need to apply based on the geography we are looking at. Okay, so these are the great things that we need to factor in while valuing the startup based on relative valuation. Okay, another point is like when you are comparing your company with the listed peer companies, those listed peer companies have actually like crossed the benchmark or the threshold limit, all the due diligence is being done, and they being trading, and the liquidity or the volume proposition of those listed companies are on a higher side. When you talk about your private limited company, my company is private limited, there is a liquidity issue. I can't find an investor who is investing in my company will not be able to take an exit whenever it wants to. It is only like when the new investor is coming, he may be able to take an exit, or in a scenario when the company is going for an IPO round. Okay, so we need to understand like when we are valuing our company, first thing first, what sort of companies and segmentation we are taking, and whether that matches to the financial numbers profit margin, cash flows and or not. And then we need to, and now suppose you find like 8-9 companies, what to do about it? Do we need to look into the average multiple? Do we need to look into the uh, median value, or which is more important? I would always say that always go with the median value rather than the average value, because the median help in removing the outliers. Okay. I was just talking like there being the liquidity issue, and so we need to build into the liquidity discount factor. Okay, when I say liquidity discount factor, it may be 15%, it may be 20%, based on the liquidity positioning as well as the time frame when you will be able to get the next round of investor, or when you are able to get go to the IPO round. So we need to understand this, and we need to factor in accordingly or build in the discount on the multiple accordingly. Okay, suppose I been valuing a company which being a real estate company. Okay, then in that parlance, because the asset is very large, so price to book value multiple is more relevant in that case. Suppose if I being looking into a company which being an immature company, private limited immature company, and I being applying the P multiple. Generally, when the company being a private limited company and the promoter is looking for saving the tax, then the profitability, the profit after tax that being shown is generally being a suppressed one. And if you apply the P multiple, you are getting the wrong result or the suppressed value. So I would suggest that instead of going to the P multiple, go to the EBITDA multiple. EBITDA multiple will be a more clearer picture, and it is at the operational level. So we need to factor in these are the basic things which we need to understand while applying the comparable company analysis. Okay, so as of date today, I'm just leaving the discussion over here, and I will continue with the next round and talk about the comparable transaction multiple. Okay, thank you, stay tuned.